Hello friends, Jai Hind. The income tax timeline or the deadline is 31st of July 2022, and today we'll be discussing certain important income tax saving tips. Let's start. First of all, we all understand what is standard deduction. Across the board for everybody, an amount of rupees 50,000 is exempted from income tax, and this is known as standard deduction. Now somebody may ask as to why was this standard deduction started? Well, this was basically to subsume the transport allowance, the medical allowances, etc. and across the board to give relief to the public. An amount of rupees 50,000 for each and every individual is exempted from income tax, and this is known as standard deduction, and this is required to be deducted from your salary, and it is not considered to be a part of your taxable salary. Now, going further down, house rent allowance exemption, a very important exemption which large number of people are confused about. It's our duty to remind the chartered accountant who is filling our income tax return, or in case we are filling ourselves, that in case we are getting HRA or we are paying house rent to somebody, we must claim HRA exemptions under section 1013A of the IT Act. Now certain caveats. In case you are staying in your own self-occupied house, आपका खुद का घर है and you are staying inside that house, obviously you are not paying to anybody else and you are not authorized HR exemption. In case you are staying in a rented accommodation, that rented accommodation may be of your parents' accommodation also. In case you are paying to your own parents, still you can claim HR exemption. You are getting HRA, you are paying to your parents, you can claim HRA exemption. So this is an important thing which you can utilize to save tax. Now what are the limitations of HRA exemption? There are certain caveats to it. HRA exemption is authorized to you subject to the minimum of these three. What are the least of these three? The actual HRA which you should take a paper and a pen and you should write down what is the actual HRA you paid. Then in case you are staying in a metro city, 50% of the basic pay plus DA you must write down, or in case a non-metro city, 40% of the basic pay plus DA, write down on a piece of paper. Next you write down the actual rent which you are paying minus 10% of your basic salary plus DA. So least of all these three, in तीनों में सबसे कम whatever the amount is, that is exempt to you from your income tax. That will be subtracted from your salary, gross salary. And that is not taxable. HRA is not taxable, subject to the minimum of these three. This is the thing you must note. Now let's go down further. Section 80 GG. When HRA is not applicable to you, means your employer is not giving you HRA, but still you can claim certain exemptions on house rent. What is that? Again, take a paper and a pen. In case you are falling in this category wherein you are not receiving any HRA from your employer, what do? You write down rupees 5,000. You calculate 25% of your total income and write it down. Then you write down the actual HRA actual rent which you are paying for your house minus 10% of your total income, and the least of these three is in तीनों में सबसे कम amount. Maybe in large number of cases it could be 5,000 also. That is the amount that is exempt to you from income tax. So these two facilities, the HRA when you are receiving HRA from your employer, and under 80 GG when you are not actually receiving HRA but you are paying HRA, you are paying rent. These two facilities you can avail for exemption of income tax. Going down, very interesting. The defense services personnel and certain other uniformed forces, they are not aware that the union under section 1014(1) rule 2B1, maintenance allowance for the uniform is exempt from income tax. If you are receiving any Maintenance allowance for uniform yearly or quarterly or in whatever manner, that is totally exempt from income tax. This you have to remind to your CA. Going down further, a very, very important clause which a large number of us know also, some of us may not be clear about it. That is the most popular section of the IT Act, section 80C. हर कोई 80C की बात करता है. Your entire provident fund, subject to a maximum, all these things are subject to a maximum 1,50,000. If you are depositing provident fund money and that tent amounts or that amounts to rupees 1,50,000 or more, you will get an exemption of 1,50,000 in your from your total income. That will not be taxable. So apart from your defense service officers fund, you could DSOP, you can say, apart from your GPF, your public provident fund, your LIC, your equity linked savings scheme, your tuition fee amount, your hostel subsidy for your children, in case you are investing in national savings scheme, your home loan principal amount, stamp duty for the houses you purchased, house registration charges for the house you purchased. In case you are contributing to Sukanya Samriddhi Yojana, that's a Yojana for a girl child till the age of 21 years, you can contribute some amount. The amount being paid as in installments for that. Senior citizen savings scheme. In case of ex-servicemen and those who take premature, above 55 years onwards, you can contribute to senior citizen savings scheme. This is an important clause which large number of people don't know. All these things combined, subject to a maximum of 1,50,000. Total of all these should not exceed 1,50,000. If it exceeds 1,50,000, you can save, but exemption will be only for 1,50,000 rupees. So up to 1,50,000 on your PPF and other things which we have discussed, you can save, provided you are contributing to these things. Now, section 80C has got certain sub-clauses. What are these? We'll discuss. Section 80CCC. Anybody contributing towards annuity pension plan subject to a maximum of 1.5 lakhs under section 80C. This is also a part of 80C only. Somebody is not having GPF, PPF, but annuity pension plan somebody is contributing, working in a private sector, subject to a maximum of 1,50,000, he or she can also claim exemption from income tax. 80CCD1, this is meant for the people who were enrolled into government jobs after 2004 and they are contributing to the new pension scheme. Under section 80CCD1, a maximum of 1,50,000 rupees contributed towards NPS is exempted from income tax. They can contribute more also, but up to rupees 1.5 lakhs under 80CCD1, under this section they are exempted from income tax. Anybody to NPS can contribute 10% of the salary, and if he or she is self-employed, up to 20% of the gross total income. These are the caveats for NPS which we all know. Now, NPS people are slightly at an advantage compared to the old pension scheme people. What is the advantage in saving? Let's discuss. See, this is 80CCD1B. What does it say? It says it's an additional facility for the people contributing to NPS. An additional deduction of 50,000 over and above 1.5 lakhs, sorry, which we discussed here. Under this section, NPS 1.5 lakh is exempt. They can further contribute 50,000, that is this plus this makes it 2 lakh rupees. So under this section, another 50,000 rupees. Under this section, 1.5 lakh rupees. So a total of 2 lakh rupees the people contributing to NPS can seek exemption on income tax. So in some way, the people contributing to NPS have a slight edge over the old pension scheme, wherein the old pension scheme can save maximum up to 1.5 lakh under 80C. So this is the broad difference. Now we go down a little further. Under the NPS scheme only, the employer also contributes 10% of the basic plus DA. That amount is also exempt from income tax. So that's how we said that NPS people are slightly at an advantage. Going down a little, this is a time when medical insurance has become very popular. So if you are contributing to medical insurance premium, and if you are below 60 years, you can claim anything up to 25,000 of income tax rebate. 25,000 of contribution towards medical insurance is exempt from income tax. That will be reduced from your salary. If you are below 60,000, your parents are also below 60,000, it will be 25 plus 25k. That makes it approximately 50,000 rupees. If you are above 60,000, anything up to 50,000 premium contribution will be exempted from income tax. And in case you have parent above 60 years, another 25,000, I stand corrected, another 50,000. This is wrong. We recorrect it. See, I'll explain again. If you are below 60 years, 25,000 for self, spouse and children, plus 25,000 for your parents, in case parents are below 60 years. Anybody above 60 years, whether your parents can save up to 50,000 medical insurance premium. So if your parent plus you both, so it makes it 50 plus 50, almost 1 lakh rupees you can save on medical insurance premium, which you must try and save because health is a very important issue these days. Another interesting part is preventive health checkup. These things are required to be paid by check, as you understand, but preventive health checkup up to rupees 5,000 cash also is exempt from income tax. So this also you can utilize for saving your income tax. Now another thing, for your disabled dependents. In case you are having any disabled dependent, if the disability is more than 40% and less than 80%, expenditure incurred up to 75,000 is exempt from your income for income tax. In case the disability is above 80%, a flat of 1,25,000 is exempt from your total income for income tax. For all these, you have to have expenditure details with you. God forbid, in case you have any serious disease like cancer, etc., there is a list of diseases, you can surf it on the internet. Under section 80DDB, if you yourself or your dependents are above 60 years, you are exempted an expenditure of up to rupees 1 lakh. If you are below 60 years, an expenditure of rupees up to 60,000 from income tax. This will be deducted from your salary, and this particular amount which you spent on a serious disease will be exempted from income tax. Let's go down. 80E. For ease of understanding, we may say that E stands for education. Complete education loan interest, if you have taken an education loan for self, for spouse, for your children, the complete interest element, irrespective of limit, for the first 8 years from the date of first installment payment is exempted from income tax. This is basically to encourage higher education. So in case you have taken an education loan, you must utilize this particular section for saving income tax. Going down a little further, 80EE, very important clause. These days youngsters, those who don't own a house, they have a dream of owning a house, and they must fulfill their dream. They must take a home loan, purchase the house. The caveats are that the property should be below 50 lakhs and the home loan should be below 35 lakhs. In case it be so, then the complete home loan interest, subject to a maximum of rupees 2 lakhs, is exempted from income tax. This will be deducted from your income. This will not be considered a part of your total income. I repeat, in case you have taken a home loan initial few years, the interest amount paid back to the company which is given to you a home loan is more. The complete interest amount is exempt from income tax subject to a maximum of 2 lakh rupees. These two caveats are there which you have to keep in mind, that the property should be below 50 lakhs and the home loan should be below 35 lakhs. Youngsters whose dream is to purchase a home must avail of this facility, thereby saving tax. Going down, 80G. For ease of remembering, G stands for give. I am just giving you a hint, an easy method of remembering. Any donation of yours to any charitable trust. Large number of charitable trusts are there. You can surf it on the internet. You can donate rupees only 2,000 in cash. Rest has to be by check only. More than 2,000 has to be by check only. Let's say you are donating to Prime Minister's Emergency Relief Fund. 100% of that amount is exempted from income tax. Rajiv Gandhi Fund, 50% of the amount is exempted. So you can see the list. Exemptions between 100 to 50% to any charitable trust, depending on the type of charitable trust, are exempted from your income. That is not considered to be part of your income, and that is exempted from income tax. Going down a little further, 80GGB and 80GGC. Very interesting. The political parties, gentlemen, are very clear, you understand. In case you donate or any company donates to any political party, the 100% of the amount, the complete amount is exempt. 100%, see. In case any company donates to any political party under section 80GGB, 100% exempt from income tax. 80GGC is for individuals donating to political party, 100% is exempt from income tax. That's how I just made a remark. The politicians, for themselves, they have made this special facility. 100% of the amount given to them or to their parties, more than 2,000 by means of a check only, is exempt from income tax. Please keep it in mind. Now let's go down a little further. 80TTA1. Very important clause, very important section rather. At large number of times we forget it. We don't tell our CA. We all have some amount, 1, 2, 5 lakh rupees in a bank. The interest earned from that amount is a part of your income. And if you are below 60 years, on your saving bank account, only saving bank account, not FDs and RDs, interest earned up to rupees 10,000 is exempted from income tax. Please remind your CA for this. Now for senior citizens, there is an additional facility, that is 80TTB. For senior citizens, anything earned on FD, RD, recurring deposit, and even bank saving accounts, interest earned up to 50,000 rupees is exempted from income tax. Below 60 years, 80TTA, 10,000. Above 60 years, 80TTB, 50,000 is exempt from income tax. Please remind your CA and certainly seek this exemption which is due to you. Going down further, this is meant for people who are slightly intellectuals and own some kind of a patent, 80 RRB. अगर किसी के पास कोई patent है, in case somebody is having a patent, owns a patent, and an earning accrues because of that, the first 3 lakh rupees from that patent earning is totally exempt from income tax. This is basically to help promote intellectual property rights. Okay. Last but not the least, a very important clause. The clause is section 87A. Large number of times we forget it. This is mainly a relief for the lower income group. Anybody earning less than 5 lakh rupees. Once his total tax is calculated, after final computation of the tax, out of his total tax liability, let's say his tax liability was 13,000, 12,500 is totally exempt, and in case his tax liability is below 12,500, the complete tax liability is exempted or excused from income tax. A beautiful clause which we must remember. So gentlemen, this was broadly what we discuss about the various sections of IT Act. Thank you very much and Jai Hind.